Hello and welcome to San Diego Market Watch, where we bring you timely, accurate, local real estate information. Today is September 1, 2022, and we are going to jump right into the San Diego real estate market numbers. So, the number of homes for sale in San Diego County is at its lowest point since July 6th. So that's nearly 2 months. Going all the way back to June 29th when we had just over 4,200 homes on the market. That moved up pretty quickly to around 4,400 on July 6th. And then we ballooned up to around 4,800 homes toward the end of July. And the number has been gradually decreasing since then. And even a little more than gradually decreasing this week. We are at 4,366 homes for sale. And I will add that, in the last week, there have been a couple of hundred expired listings, but some of those expireds go back into new listings. And then, of course, you have canceled listings and withdrawn listings as well. And that totals just a bit over 300 when you look at all of those. However, not all of those homes are going to continue to be for sale, and some of them are already accounted for in the new listings number, which leads me to tell you that new listings are up just a tiny bit from last week, not significant, and new listings have been declining ever since June 29th. So, the idea that sellers are rushing to the market because they're panicked is just not borne out in these numbers. There were definitely a rush of listings coming in late May and early June, but that number's been going down since, late June, early July. And all that time, pending sales have remained very, very steady. That number has remained relatively constant, which indicates very steady buyer demand. And then, of course, as we're looking at pending sales, closed sales are basically a mirror of that, although somewhat of a lagging indicator. Closed sales have definitely been going up fairly steadily since the middle of August. So that's what's going on with the homes for sale, new listings, pending sales, and closed sales throughout San Diego County. When we take a look at mortgage rates, those are up from last week just a bit. We're at 5.66 on the 30-year fixed average throughout the country, according to Freddie Mac. So that definitely has some people, a little irritated, freaked out, whatever you want to say. Buyers are not really happy about this number. They still remember rates, back here. And the thing about markets is markets change, and so now rates are higher, which definitely reduces the affordability of homes for many, many buyers. So this number, it was down, and now it's bounced back up, but it is not as high as it was in early June. And there are definitely ways that buyers can mitigate higher rates and buy in now, because once we have a handle on inflation, rates will go down again and folks will be able to refinance out of these higher rates or out of their 5/1 ARM. I'm sorry, I was circling the 15-year ARM, which most people don't take advantage of. Some do, but you definitely have to qualify for a lot more house than you ordinarily would if you're going to get the 15-year rate. But the 5/1 ARM is an excellent option because your start rate is 4.51 on average right now. And these are not the ARMs of 2006, 2007, 2008. These ARMs, they force you to qualify at the final rate. So you're not buying more home than you can afford. You're just getting a better payment for 5 years. And then you're basically saying, within the next 5 years, at some point, rates are going to be better and I'm going to refinance. And that is just a very typical thing that Southern Californians and Americans have done over the decades as interest rates fluctuate up and down like they always have. These hyper low rates that we had in 2020 and 2021 were not normal. They were historically low, and there's no way that we could really sustain rates like that because of what it was doing to median price, i.e. inflation. So you can see, and this doesn't change. This number only changes on this chart once a month. So I'm not giving you any new information about median price here. I'm just pointing out that if you look at 2021, we had a pretty sharp spike up in median price, and then it came down through the summer. And in the fall, it kind of waffled a bit, and everybody thought, well, this is it. Things are just kind of going to waffle along now, maybe go down. And then 2022 hit, and whammo, we went up significantly in the first few months of 2022. And then much like last summer, we're coming down again. Now, it's definitely more pronounced right now, for sure. No doubt about it. I am not trying to gloss that over. Median price has come down significantly since April, May of this year when it plateaued. But you have to remember this rate of increase was completely unsustainable and creating a serious affordability problem. So it kind of had to come down. But when you look at where we were at the beginning of 2022, we are still significantly above that and expect to wind up the year above that and certainly above this. So appreciation in homes in San Diego County is still strong. The number of homes on the market is less than it was, but still enough homes out there for buyers to sink their teeth into and have some options. So the San Diego real estate market is holding its own for now. And that's what's happening in San Diego County this week. If you like this content, please like, share, subscribe, and comment. We'd love to hear from you. And we will be back next week with some exciting stuff. Tomorrow, of course, with our TGI It's Friday show. And then next week with some neighborhood real estate updates. And I have a special guest coming in next week to talk about ways that buyers can mitigate their introductory interest rate in a very low-risk fashion. So stay tuned for that. Thanks for watching, and we'll see you next week.